Hey guys, welcome to this video. I did a pound dollar one just before. We've just had our post CPI, so I'm going to do the AUD dollar. Don't forget to get my free training underneath. Don't forget to like, share, comment, subscribe, wherever you're watching this. So, massive green candle, 6369, all the way up to 6439. A big move to the upside on your AUD dollar. You know, compared to what you've seen as of late, you've been drifting down and down and down and down and down. You did have a larger green candle over here, okay, in the week 30th of October, just before Halloween. But it didn't for you. You fell straight back down. It really was very, very lackluster. So the fact that you're pushing back straight away, and you can see that on this renewed green candle, bit of rejection to the downside. You can see the market is saying, all right, well, perhaps there is a bit of room to continue this surge upwards. And you can see that's the case if you go to your lower time frames, 5 minute, 15 minute, etc. You've got this amalgamation of key MAs. You had sustained sideways movement really in preparation for this. I think the markets were just knowing something was going to happen like this. And it went straight to the upside. And that's why you don't guess the news. If you were guessing it would fall, you would have been completely wrong. So be very careful on that. Now, alike to my pound dollar, what you normally get with moves that are very harshly up is some kind of pullback that comes harshly down in between before you continue further, if you continue further. So my bias, of course, remains short. I wouldn't get long. I think it's far too late to do that. If you look at your stock oscillator, you can see you're coming to the upside. You're not down here. You really shouldn't be buying it. It's just too late. If you go onto your hourly, the story is much the same. A candle that sharp, you know, it just ends badly after a while. You can see a similar thing with this and that and that and this. Okay, ultimately, you get these larger falls. You've got a bit of the same thing over here as well. Okay, big move up, big move down. So that's in the near term. But looking to the longer term, of course, if you go on your daily, you can't see too much because of the choppy price action before. I wouldn't be surprised if your little jilt does come slightly higher in line with that level of key price action. But really, if you do end up beating this high ultimately, I wouldn't be surprised if you rest onto that key MA there, your 40 MA, and it comes in line with all of this. Okay, you can see there is lumps of price action over here. Okay, you've got a lot of rejection at that point. So if you do return there, you get sort of 6575 area. You may find that's quite ideal for newer shorts. It would go fully in line with this longer term downtrend, of course, which you can see here by labeling these highs. You can see there's lower highs, lower lows. And if you do get something in line with that, it really wouldn't shock me. And you may find that comes at a really key technical zone in line with that 40 MA and all of these key these key price action levels I've labeled. So that would really constitute short zone one. If I was going to scale in further with DCA entries, I would need it nearer this higher MA, slightly further above. Okay, that would be this one. I believe that's your 100 MA. So those two really are key short zones for me. I wouldn't be shocked at all if you do find your stock oscillator or your RSI, whatever you're using on the weekly, does perch up slightly higher to here. Okay, but whether it has a little squiggle first and then does it or not, we'll have to see. I wouldn't be shocked if that is the case. So near term, if you do come up here and then just get a little dip back and then further, wouldn't shock me really at all. Okay, so market sentiment is pulling away from people holding the dollar. They're getting more interested in alternative currencies or currency pairs in all, I guess, because you've got that across the board. If you look at your AUD, if you look at your New Zealand euro, it's all coming up to 1% gains on the day. Okay, ultimately that has to stop, and I wouldn't be surprised if it happens at those areas. Any new longs, like I said, you would need a dip back for me around here first. And ultimately, you may find you get further long entries in line with these key previous price action levels to the downside. But you would need a considerable fall for that. I would say you're probably going to be more focused on the local areas. Like I said, shorts probably around this area in line with that key price action level I've labeled over here to the left-hand side. and now here. And if your MA squicks down like that, you've got all this rejection as well. It could be very ideal as a level to exit longs, get short. So lock-in gains if you have it long, probably start to look short. Thanks for watching. Get my free training underneath. See you in the next one.